Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Have you started planning out your projections and targets for 2022 yet? It's late November, and most of my clients have locked these down in the past 60 days. And then we review them against their Profit First allocations and their personal goals to make sure everything is in alignment. I suggest you do the same. When you have targets and you measure against them, it's a lot easier to course correct early in the game. It should not be a surprise next December of where you are at. And it's also a great time to check in with your accountant about any last-minute tax moves for this year. Please don't buy things you don't need to save a few dollars on taxes. It's much better that you overfund your retirement accounts. Let's make wise decisions. Many of us have mindset issues when it comes to money, and that's our topic for today. Heather Abbott is also known as the Prosperity Pro. She uses a unique combination of right brain mindset work with decades of experience and knowledge as a CPA and financial advisor to demystify finances and make money management not only attainable, but enjoyable. She uses the whole brain approach to create prosperity in the lives of those she works with. She's been helping people for over 30 years. Let's learn from her wisdom. Welcome to the Profit Answer Man, Heather Abbott. It's great to have you join us today.
It's a pleasure to be here.
Can you share a little bit about your business and what you do?
Sure. What I do is empower women with confidence, empower people with confidence in their finances and joy in their lives. So I am a speaker and a coach, and I use right brain and left brain in combination. So I have the money mindset that I bring to it, plus I started learning accounting in 1984. So I've had my own accounting practice. I'm a financial advisor. I'm a CPA. So I bring all of the right brain and left brain together to give people overall prosperity, which is the wealth and the joy combined.
Do you find most accountants bring the two together?
No. No, not at all. When I'd go to work at Investors Group, I wasn't in the city, so I had a remote office. But when I would go into the office, the receptionist actually called me Bohemian Pixie and said, "Don't ever change." I was like a breath of fresh air amongst all the stuffed shirts.
And I think this is why most business owners struggle, is because their accountants talk a different language and they don't understand the emotional side of money.
Yeah, it's getting better. I mean, I was told in university that I didn't look like an accountant, which I took as a compliment because the stereotypical accountant is the balding guy with the pen protector, right, in the pocket. But yeah, it can be an issue. It's also a big issue that they speak over people's heads. I've always had a gift of being able to speak to people at the level they are. And it can be a challenge. I mean, as I said, 1984 is when I started learning accounting. So assets, overhead, liabilities, cost of goods sold, those are just normal vocabulary words for me. But I know when I'm speaking to somebody who is not in that profession, I need to use different words.
And I think that's where people really struggle, is getting the common language so that they understand what's going on in their business. And unfortunately, most accountants are doing taxes, and the only time you see them is tax time, where they've been working 80 hours a week and they have zero patience left to answer questions and get things across. And then when they do have time, too many people are not reaching out to have those proactive conversations up front to better understand what's happening in their business.
That is so important. During the year, when you discover that you are profitable, you really should have a conversation with your accountant at that time, get an estimate of what the taxes might be, right?
And that's what we're doing at this point in the year. We're having all those year-end discussions with the accountant to say, hey, have you set aside enough money, and what are they expecting going forward, so that it is not a surprise at tax time? And we'll dig into that a little bit deeper. But those are the conversations that need to be ongoing, because your accountant doesn't know how your business is doing this year unless you tell them, hey, this is what's going on in my business this year. Can you take a look at it?
They also don't know what's going on in your personal life. And sometimes that can be a tax deduction that they don't know about and you didn't know could be a tax deduction. It's depending on where you are. I mean, in Canada, I know a good example of this would be when my son was diagnosed with Asperger's, which is a form of autism. He actually qualified for a disability tax credit, which is like a $7,000 deduction on your taxes. So if you don't think to tell your accountant your health issues. And I mean, for a business, if you're incorporated, this may not impact you whatsoever. But if you are a sole proprietor where your business is you, this can be very important.
All of those things come together. And so it's important to have those conversations. We try and tell people, don't let the taxes drive the decision, but instead find the decisions you're already making and figure out how to make them tax deductible.
Exactly. You want to save as much on taxes as you can, but you want to be taxable, because being taxable means you're profitable. If you never pay any tax and you're so proud of it, well, I'm sorry, but do you not make any money?
Well, and that is the conversation. Too often, I think what they do is they make a large purchase. And it may be something they needed, but more often than not, it's not something they needed, or it's something they could have done without. And then 2-3 months later, they're always wondering, why are we struggling with cash flow?
Yeah, when you buy something on sale, you're actually still spending money. Yes, okay, you saved on the purchase. Good for you. But if you didn't need it, you didn't save. That's why they make coupons. That's why they have sales. It's to encourage you to spend.
And in a business, you need to run lean, because most businesses don't have very large margins. And so you have to be extremely tight to those and making sure that you're appropriate and not chasing shiny objects. We always say we can look at contractors and we can look at their truck, and it's kind of inversely proportional to how long they're going to be in business. The fancier the truck, the less likely they're going to be in business a year from now, because their overhead is killing them.
I'm going to laugh at that one significantly, because my fiance is a carpenter. And he drives a 2005 Ford that is an awesome truck. It's a sport truck, which you would not think can carry staging and all kinds of things, but the back window goes down and he can fit more stuff on that truck than you could fit on a full size, and he doesn't have the overhead costs.
And that's the key, keeping your overhead costs down.
But do your listeners know what overhead actually would be?
So let's talk about that. What is overhead?
Overhead are the expenses that you pay on an ongoing basis that are not directly related to your sales. They're often overlooked until tax time, when you get your taxes and you're like, but I thought I made money. You forgot to calculate the overhead in when you were doing the pricing. So I've used this example before, and probably just because I like chocolate. But if you are a chocolatier, you want to open this big fancy chocolate place. Well, if you start off doing it in your home and you're just making chocolates using everything you already have, the only overhead cost really would probably be your electricity, because you're using pans you already had. You're using the building and the equipment and the fridge and everything you already had. But if you go and open a store, your profit margins are going to go down on those chocolates because your overhead is going up. You now have to pay rent. You have to buy more equipment. You may have salaries that those aren't actually overhead, but they aren't directly related to your sales. And all of these expenses, if you're having your books done on a regular basis, then you can look and see these and see if you're actually profitable on an ongoing basis. But a lot of people, they're like, oh, I have a bookkeeper. Now I don't have to look at the books until I take it to the accountant. And I still don't have to look at the books because he'll do the taxes and he'll tell me how much I'm getting back or how much I owe. So I never have to look. Okay, we'll see you when your business stops. You have to look. If you don't look, you don't know if you're profitable, and you can't adjust. It's not whether a business idea is good or bad, it's whether it's managed well that counts. And you cannot manage something without the data. So get a bookkeeper, but make sure that you are looking at those financials and that you understand them at least on a monthly basis, preferably more often.
It is important. And I find most business owners, this is like the area that they don't like to do. Mm-hmm. And it's an area they struggle with. And they also don't understand the role of the bookkeeper and the accountant. So they think the bookkeeper and the accountant is doing this for them. In reality, in most situations, they are not.
No. Bookkeepers, you give them the numbers. They may ask you questions if they're a good bookkeeper, as in, what's this expense for? Because you have to categorize them. If you're trying to sort your receipts, don't ever do it by where you spend the money. I have seen that more than once. You are not saving yourself any money. You're wasting your time. The bookkeeper doesn't care where the receipts are from. We only care what category it fits into. If you want to know how to sort them, look at your taxes. They're on there. Every category, supplies, rent, those are what you break it down by. But the bookkeeper has to be able to do the books and be capable of explaining it to you so that you understand. If you have a chance as a business owner to go and take a basic bookkeeping course, I recommend you do it. Do not take over doing your own books. That's a waste of your time. If you are running a business, your time is more valuable than to be spent doing bookkeeping chores, but it will help you to understand what the bookkeeper and the accountant are telling you. That's the only reason I recommend it.
And that makes sense. You have to have at least enough working knowledge to know what to look for and to understand why things get to where they are. And then that can help you better understand what's going on. And when I'm looking at reports, what I'm looking for is anomalies. What is changing over time? What are the differentials? Where did things go up or down? And was it good that they went up or down? Because sometimes it's good that advertising money went up because you're trying to grow a business. So it's always everything that when we look at the numbers, it depends. It depends on what you're looking for, what your outcomes, and what you're trying to achieve. There's not a right or wrong answer to this. It's kind of much more of an art than a science. And that's why automating your books is not necessarily the right answer, because it's not giving you the information, and it's not helping you to get the insights that you need.
Have you ever heard the saying, anyone who ever said that accounting is not a creative profession has never tried doing their own books?
It is.
It is. There's nothing black and white about it. There really isn't. All of the laws are open to interpretation. The rules in Canada, as soon as a tax code is published, it's actually partly out of date because we set it by the legal system as well. So anything that's challenged, it's the interpretation of it can get changed. It's really, you need to know. And when you were speaking of doing comparisons, you can compare it. It's very easy for an accountant, a bookkeeper, to give you comparisons to the previous year or the year before that. It's just a simple selection. So you can see weekly, monthly, yearly, whatever, how you compare to a previous year. You can also, if you have taken the time to do budgeting or forecasting, two different things, but you can compare to those. Budgeting is setting out how much money you're allocating for the different things. But forecasting is an educated guess on what you think your future results will be. And if you have expectations for the year and sales goals, it's good to compare your numbers to the forecast to see if you're on track, if you're exceeding, if you're lagging behind, and then you can brainstorm on why.
And that's what I do with all my clients. We've already laid out 2022. And we're looking at what that looks like. For some clients, they actually like to budget out 5 years. And it's not that we're going to actually hit those targets 5 years out, but what it shows them is small changes over time create radically different results in their business. And so it's the ability to see what small changes will do. And then every month on a monthly basis, we are consistently looking at, hey, we said we were going to do this. What was reality? What caused the difference? Was it good? Was it bad? What can we do to continue to make those choices? And then from a cash flow standpoint, sometimes we will forecast out forward cash flow. What money is coming in? What money is going out? Because if we can do that, we know a problem is coming before it comes, and we won't overspend money that we've already allocated to something else, but we forgot.
And you can adjust for it. I mean, everyone knows a bank will help you when you don't need them, but they won't help you when you do. That's just the name of the game. So if you know a tight point is going to be coming, it's a good time to go get a line of credit or get some financing set up ready for them, right? You don't want your business to go under simply because you weren't looking ahead. You can't always look in the rearview mirror and see where you were, which is what your books are. Your books is looking in the rearview mirror backwards at what's already happened. You also have to be looking out the front window.
Correct. And I think for many business owners, that's difficult. And even for the accounting profession, I think it's difficult sometimes for them to look forward. That is a different skill than the rearward looking skill.
It is. It's totally different. It is. Yeah.
Were you going to say something?
Well, I was just thinking, you were saying a minute ago about setting up, like knowing what to expect and setting expectations. And it just made me think about setting expectations in your life, in your personal life as well, or overall. Because when I do things, I'm not working as an accountant anymore. I do like to clarify that for people. I'm still an accountant, but I'm not a practicing accountant. I am educating people is what I'm doing, because I have that and the financial knowledge, but I love to get it so that people are actually making sure they are a priority and enjoying their life. So that was just what popped in my head.
And so my first call with clients, we understand their life. We look at who they are at people. We figure out, what do you need to run your home life? And what are your bigger goals, both professionally and personally? What are the things you're trying to achieve? Because what I find is sometimes business owners will come to me and they'll say, well, we're going to do this. And I'm like, wait a minute. You tell me you want to do this, but that didn't fit in with what you told me you wanted for your life and personal goals. How are the two going to mesh? And they're like, oh, I didn't think about that. And then they reprioritize and they don't make that mistake of chasing the wrong.
That makes me think of something Joe DiMaria always says. He's got Teach to Scale. He's always saying, what are you hiring this thing to do? So if you want to create a website, what is it you're hiring it to do? What's the purpose? If you're creating a podcast, what are you hiring it to do? So that would help keep some of those tangents out of the way, because if they know their goals, but you do actually have to take the time to set the goals and set the priority, because I find a lot of people, especially successful business owners, they're not taking the time for themselves. They're not making themselves a priority, or their family a priority, or their vacation. Like, what is it that you're striving for? When you get to the end of your life, are you actually going to be, I made lots of money and the business worked really well? Or are you going to be like, I made lots of money, the business worked really well, I managed to help people, I managed to go on vacations, I had a great time, like I did the things that mattered to me. That's really key in true prosperity.
And I think for a lot of business owners, the concept of a 1-week vacation just seems so foreign to them. And the concept of a 2-week vacation seems impossible. But that means your business owns you. You don't own your business. And so
you have a practice, not a business.
If you can't figure out how to take 1 to 2 week vacations, and if you aren't doing it on a regular basis, you've got a problem. Because what's happening is it's telling me you don't have thinking time. And thinking time is truly what can make your business differential. It's what can give you the ability to scale or to, as you talked about, to live life. But if you don't have the time to think through all of that and you're constantly grinding in your business, then that's going to be a struggle.
Yeah, you have to take the time. If you can say that my boss is a slave driver, I never get time off work, I never get vacations, I'm underpaid or I'm overpaid, but I never get time off. Keep in mind, you're your boss. Like, do something about that, people. That's not right. Yeah,
most entrepreneurs work for a sucky boss, and it's the reflection in the mirror.
Yeah, no, you can't. You have to take control and set the boundaries. Like, it's not all about the business, it's about you as well. And if you look at time management and priorities, that comes into it so much as well, right?
It does. And they say time is money. And so that's one of the areas. Now, you talked about overhead costs and variable costs. I think one of the costs that we all forget to include is our own time, and putting that time cost into the equation as well. And that's why most business owners aren't making enough money, because they aren't valuing their time cost and putting a number to it.
Exactly. That 80-20 rule in business, 20% of what you do generates 80% of your income. Yeah. Out of 10 hours a day, 2 hours are essential tasks. So if you track what you're doing and make a note of that, then you can see if I interviewed a Sim on my podcast, and he mentions this. He said to track what you're doing, and if you can hire somebody to do it for less than half of what you would regularly pay yourself, hire them, right? Unless you are totally strapped for cash and you cannot do it any other way, you have to hand those small tasks off. You have to learn to delegate and manage if you want to grow. Large businesses are not a one-person show.
If you're strapped for cash, though, that's telling me that you probably have a pricing problem.
Or you're just getting started.
So then you have a revenue problem. So it's revenue, pricing, or your cost of delivering the service or product that you have. All of those are levers. And when you look at them, you can generally pick which one is the problem. In the beginning, yes, you need to drive revenue. So it's a sales issue.
Yeah, definitely. There's really only two ways to increase profit. One is have more money come in, and the other one is have less money go out.
It's not that difficult.
It's a simple equation.
It is a simple equation. And we tell people, mind the gap between what comes in and what goes out. And then pay attention to the key performance metrics. So one of the things with money coming in is it's not just that you made the sale, it's when are you actually collecting the cash? Because if you make a sale and you deliver something and they don't pay you, that's a massive, massive drag on your profit. And so making sure that your accounts receivable, your policies of how you loan money out to people, because that's what accounts receivable is. You loan somebody money to buy your product. And generally, most businesses are not banks and they shouldn't play that role. And if you are going to play that role, then make sure you've included it in your pricing to cover that cost and to cover the percentage of people who may not pay you. It gets
there
very
is insurance available for that. I have seen some businesses have that. And I've also seen businesses go under because the accounts receivable got to be so high and they couldn't collect on it. Of course, a supplier issue is also a reason that I've seen businesses go under. They were highly successful. They were in demand, but they only had one supplier. And something happened with the supplier and they went under.
And in business, there are a lot of risk points, I'll say. And having one supplier is a risk point. Having one client is a risk point. Or even having one very large client and a whole bunch of small clients is a risk factor. So you have to look at all these different issues within your business and figure out how to diversify your business so that no one thing can cause you to implode.
Yeah. I mean, we're covering a lot of things. And if somebody's just getting started, they're going to be panicking, thinking, oh my God, I don't know all these things. Relax. It's not that bad. You just really have to pay attention to what's going on. That's the main thing.
Yeah, and most of our listeners have already started their business and they know how to start bringing in revenue. It's just that they're wondering, how do we keep more of this money?
Yeah. Well, your system of Profit First is a great way for keeping expenses under control.
It gives everybody
having clarity. Clarity with the numbers is critical. You have to know where you stand. That pile of receipts is doing you no good until you can actually have the totals and see what's going on.
And that's what Profit First was designed to do. It's a system for entrepreneurs designed to work the way they work, which is bank balance accounting. Is there money in my bank? Can I spend it? And Profit First makes sure that you allocate your money to the appropriate accounts and that you can see how much you truly have to spend after you've been profitable, after you've paid yourself, which I know is a struggle for many, and after you've set aside money for taxes, because it's not yours. It belongs to the government, and they are very good at coming after it.
Yes, definitely. Keep in mind that when you are deciding that you can spend the money in your bank account, and this goes for personal spending as well. Just because you have money in your pocket doesn't mean you can spend it. Have you looked at the bills that are coming up? Because there may be big bills, there may be obligations or something you really have to pay attention to and be prepared for.
And that's something the bookkeeper can do for you, is show you and track, because they've got a pretty good idea of what's coming. They should be able to help. It depends on the bookkeeper.
Yeah, because I'm thinking here, like part of what I do, where I start with all my clients, is I have a system that gets you clarity with your numbers, like absolute clarity. And it's not something that I learned in all the years as an accountant. And it's not something I was taught when I was becoming a certified financial planner. I didn't finish the last few exams on that, but it isn't something that's taught. There's a unique way to look at it, and there's various spins on it out there, but to actually know what you can and cannot afford, you have to look at everything, all your obligations.
You do. And you have a pretty good idea of what that is. And if you keep track of what you're spending and when the bill is due, then these things can be predicted going forward.
Yes. Yeah.
So you mentioned that you created your own system. What is it that you didn't see that was in the market that you thought you had to create something different?
Well, a lot of people, for instance, one person had come to me and she was struggling financially. She kept going in debt and she wasn't sure why. She'd been to a different accountant. She had been to a debt counselor and she still had no idea what was wrong. And we just looked at the way I have it set out with the obligations, and because I have obligations, food and fun, and then paying you. And just the obligations, because I convert everything to weekly, so it's relevant. And just at that point, we could see she was $100 over every week just with obligations. There was nothing left for food and fun. And because of the way it's done, we could see the biggest problem was the truck loan. And there was another one, I forget what it was now. This was a few years ago, but she could clearly see where her money was going, what her obligations were, and how to get rid of them. So it's a huge thing. The first time I was exposed to this, I was working at Investors Group, and a woman named Stephanie Holmes Winton came in and did a workshop on this for the day. Her system is slightly different. It's aimed at financial advisors to help get them to help their clients so that they can move them forward. And I took some of that and some other things because once you've heard something, you go and look into it more. And I found more information and I created my own spreadsheet that does calculations for you and changed it up a little bit to what I think it works. And so that's where it came from. But I was fascinated when I first heard it, and it is really, really helpful. I've helped people from millionaires down to a young 20-year-old. Well, she's 27 now, who is doing very well, has her own house, her own vehicle, is almost completely out of debt. And it's because of just going through this with her. And it gave her such clarity, and she knows what to avoid and how to keep expenses within a certain percentage, the obligations, right? So it's critical.
And that's key. You've got to keep your spending in line. And again, it comes back to, right? She bought the truck and the truck is crushing her. Just like many contractors, they buy the truck and they don't realize how much revenue they need to generate to afford the truck. And I think that's where they get out of whack.
Oh, vehicles are such a money drain. That's don't get me started on vehicle loans.
So true. Is there anything else you'd like to share today?
Just basically making sure that when you are in business and you're striving to make your business profitable, make sure that you are taking care of the number one asset in your business, which is you.
And that's very true. That's why we make sure that you get paid up front with Profit First. If people would
critical.
If people would like to connect with you, learn more about your work, what is the best way for them to do that?
You can find me on my website, hcabbott.ca, or on LinkedIn, Heather C. Abbott.
And I will put that in the show notes to make it easy for people to find you. Thank you so much for joining us today.
Thank you for having me here, Rocky. It was great.
Do you have clarity on your numbers? Are you keeping track of your accounts receivables and making sure that people are paying you on time? Do you have too much in overhead or obligations, either personally or in your business? You know, life and business get intertwined, and we do need to keep our books separately, but we also need to have harmony in both. Make sure that we can cover our monthly obligations. When you can see what's going on, you can make wiser decisions. As I said at the beginning, we should already have our targets for the upcoming year and a system to review the results on a monthly basis. Some people look at their sales weekly. That's fine. It really depends on the type of business you are and how often you need to do this. That's up to you, but you've at least got to do it at a minimum once a month. Remember, you don't need more resources. You need to be more resourceful. We focus on the bottom line. If you want a done-for-you service, you can have me as your Chief Profitability Officer. Because you have your zone of genius and want to spend your time doing what you love. I only work with a handful of clients, so they get my full attention. I work with business owners who have or are growing to $500,000 to $5 million in revenue. You can use the scheduling link in the show notes to get on my calendar for a good fit conversation to see if I'm the right person to support you and how I can help you. If you want to learn about living the life of your dreams, check out my other podcast, Richer Soul. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.